Hey, hello, welcome everybody. Getting ready to do our daily trade. I had gotten a question last week from a really good friend of mine. He said, if you were to buy Disney, uh, 500 shares of Disney, how would you do it? And so I said, well, I probably wouldn't buy Disney. It's not on my list. And he goes, well, it's not about whether you would buy it, but if you were to buy it, how would you do it? So this is just a quick rundown of how I would do it. So first thing I would do is I would look up at Disney and I would just see, what the current values are. Today the market's already closed, so we're at 108.22 for the end of the day. Get a quick chart snapshot and see what happened. This looks interesting here with the earnings announcement. It's a binary event, right? So we try to avoid trading around binary events with our options trading, which is how I would buy Disney. I would take a look at what the dividends are looking like over a period of time. It looks like there was kind of a drop off here between 20 and 24. So clearly something big happened here. I don't follow Disney, so I'm just going to assume that they had stopped doing Disney. This looks like around COVID time, and then they reinitiated their dividends later on, semi-annual. So we would probably be getting pretty close to where that is. I wonder why this is saying that there's maybe we've already passed the X date on this thing. All right. I would take a look at the earnings and see what's happening on my earnings. At least I'm positive, so that's a good thing. I have what I assume is a pretty decent trend line. I would look at my PE ratio. I know a lot of people say, oh, free cash flow evaluation and PE ratio doesn't mean anything. I've been trading for about 30 years. I tend to use the PE ratio. It's been fairly good to me. And I would generally check down here just to see if there's anything that pops out on the valuation side, and then go into cash flow, see what the balance sheet looks like, current assets. I typically want to know what's happening with my revenue. It looks like my revenue is going up. Obviously, in this situation, we're not deciding whether we want to buy Disney, just how we would buy it. So this looks fairly good. I would pop over to the chart here. I'm not a technician, but I do like to keep a quick glance at it. So this is that jump we saw before. I remember back in '99 when I first got my broker's license, people used to say, "Oh, gaps always fill." So it does see that there was a lot of exuberance here. We seem to be kind of consolidating down a little bit. We do have what looks like a pretty strong support here at the 85 region, and that support was looks like it was the resistance at one time, at least for a period here. I just checked to see if we're overbought or oversold. So I'm looking at MACD. We're kind of in the middle of the road here, maybe a little bit of future downward action, but we're probably on kind of the bottom end of that. RSI below 50. This is not typically a great sign, but my stochastics have me almost in the oversold region. So that's a plus. It goes in the plus column. So here's how I would do it. So first off, I would open my option strat tool. I will put a link to this trade in the bottom, and if you go in and take a trial, I think it's 15 days or something, then I don't know, maybe they send me a peanut or something from the option strat folks. So I type in Disney here in the symbol box. One of the fun things that I like to do is see what they'll build. So let's see if them build a Jade Lizard. Probably not the way I would set it up. Probably need a little bit more range here to see what's happening. Yeah, so clearly this feels like it's failing my Jade Lizard requirement. I would even move this in a little bit here, so at least on the downside, Jade Lizards are something you generally employ if you've got kind of a upward directional bias. In my experience, the upside seems to hurt me more than the downside. I'm going to go out here to March. That gives me 66 days. I'd probably set this at 100 put. That's probably where I would feel really comfortable buying a few hundred shares. That gives me a delta of 22. So that's about let's call it a 22, 23% chance of being in the money at expiration. So I would like we said before, 500 shares. So I would probably grab 400 right off the bat, leave myself the extra 100 just to make some adjustments later on. We are going to go with this. We're going to keep these two call spread here at the top, just so if this thing just shoots through the moon, you know, we're trying not to get ourselves hurt too bad here. But I don't mind picking up a little extra premium here from the difference between those. So I would get about $178 per on this 100, and then 84 minus 46. So let's call it $50 extra just for having this this little call spread topper. So we got a March 61. So I would probably, just because I always miss, I always feel really bad if I just throw on the puts and then the option goes to the moon. I probably wouldn't do 100 shares right off the bat. I'd probably get myself into 20 shares starting out. So you'll see that if we were to buy 20 shares tomorrow, what's 20 times 108? This should be a relatively easy. What's that? $2,200, something right thereabouts. So if I spend $2,200, I buy it at the market price or market open price. I would sell 4 put contracts at 100. So if it goes below that, then I'm going to pick up 400 shares at $100 a pop. And I put this little call spread here at the top just to goose out a couple more returns. I'm going to grab my calculator here. I'm looking at it. Let's see. If I am going to return, so really I'm putting up $40,000 in margin or something thereabouts for cash secured. And so if I was to take that $747 divided by, just for good round numbers, $40,000, that gives me about a 1.9% return over 2 months. Typically, before we get to this 66-day mark, we're going to be able to reap the majority of premium here, unless we run all the way to the left or run all the way to the right. So what does this thing look like at 10 days to expiration? So if we hold on to this thing till we're about 10 days, we start getting to a little bit of a gamma risk zone. But if the price just starts going up, we'll be able to get out real early. If the price is going down a little bit, we're just going to prepare ourselves to purchase. So if I was to buy 500 shares of Disney, that is how I would do it. Thanks, everybody.